Welcome to Trading Sadhguru. What we had discussed yesterday, let us review vis-a-vis our expectations versus what do you call the actual market movement. Okay. So here the one view was this higher low formation, higher low, and higher high formations. Higher low, higher high formation where we expected market to take an action in this direction, move upwards, provided market decides to form this pattern. Okay. So, and the another one is like because of the tariff wars, we may expect a gap down. That is, this is scenario one, and we expected it to open gap down and go further down. That is scenario two. And one more possibility we discussed this open gap down. Okay, go market goes down and then comes back. Okay, so that is a short recovery. So more or less, this view has worked out. And what we discussed is the possible decent support is around 25,000 to 25,050. But we didn't go there. 25,000, 2550. We didn't go there. And the low made today is how much? 25,152. So you can say around 25,150 defended or down move. And from there recovery also started, and the high of the day, that is 25,285. Okay, so it is well below 300. So what can we expect? What can we expect for tomorrow? So let us also have a look at 1 day, half 1 hour time frame. Okay, before we conclude something, have a look at 1 hour time frame chart. Let me erase these things. So 25,150. Now we can term it as a reliable support on the downside for this expiry. Okay, so for tomorrow we won't be looking below this level 25,150. Okay, and upside move. So today's that negativity, tariff negativity is taken out, and the correction through gap down, almost the gap is almost filled. So you may expect a little upward move tomorrow. So whether that will sustain or not, okay, that's a big question. So based on the positioning in the market, it appears that for tomorrow's expiry should be around 25,200, or if you want to consider a range or something, you can say plus 50. That is 25,200 to 25,250 range. It is expected that the market for tomorrow's expiry remains in this range. Okay, so going very bullish or very bearish for tomorrow seems to be not practical considering what has happened today. So it is prudent that either you employ strategies where your losses predefined, maximum losses predefined, and you're protected on the both sides. So in case if you get a gap up tomorrow, or further say gap down. If you get a gap up of say 100, 150 points, then it is easier to take trade, saying that market will give up most of the gains made in the gap up and it will try to come back to this zone. Okay, suppose around 25 300 to 350 market opens. So you take 24,000. I prefer to take 25,400 P or 350 P. When if market opens here, and I'll observe for 10-15 minutes, or else straight away I can also go for these options. Okay, suppose the market opens gap down, say around 25,150. So I would prefer to take a trade that it will go up till what level? 25,000. The same thing, 25,200 to 250. So which options I would be looking at? 25,050 C or 25,100 C. So why I'm taking in the money option so that the BK, that is time value, is little less compared to at the market prices. So that is the reason I'm choosing 50 to 100 points away from the market price. If you look at this also, you can say that 300 to 350, 350 to 400 and 50 to 100 points. Same here. The logic is simple. The decay should be minimal. So intrinsic, there should be some intrinsic value of the option should be more compared to the time value. So that is the reason behind choosing these things. So this is all what do you call, for the academic purpose only. This is not a recommendation. I'm not asking anybody to take these kind of trades. This is my view. If the market opens gap up or gap down, if market opens neutral, then I'll look for first 15 to 15 minutes or 15 to 30 minutes. Then I'll take a call based on where the market goes. Okay. So I'm not keeping too much hope for tomorrow in either direction. So it would be an added advantage if market opens either gap up or gap down around 100 to 150 points. So it's easy to take a trade. Okay. Protecting capital is the most important thing if you want to remain in the market and make good amounts of money in the longer run. Okay. So if the losses are small, it is always good to take the loss and get out when your view is not working out. Okay. That's all for now. Take care. Bye bye.